is December 22nd, Thursday, 2016. I'm speaking a little quieter because it's later at night and the baby is asleep. But I wanted to make sure I go through my positions quickly because I missed yesterday. And in fact, instead of just going through the positions, I wanted to bring up a topic about how to judge your success. And so just looking at today's P&L, it's already reset. But the P&L for today was over $1,000, $1,500 something. And so you might just initially look at that and say, oh, that was a good trading day. But not necessarily, because instead of judging based on outcomes of profit and loss, really you have to judge things based on how you execute your process and your plan, because the profit and loss is an outcome of over which you have no control. And so if you are judging your success and basing your metrics off of something you can't control, you are setting yourself up for a massive failure. So the only thing you can control, or the only thing you should be able to judge your trading performance, are the things you can't control. One thing you can control is how much sleep, rest, exercise, and diet you get, and how well you take care of your body. I did not do that very well the last couple of days, so I was very tired and fatigued and wasn't thinking clearly. And luckily, I didn't have to really take much action and make any difficult decisions, but I was certainly not in a good frame of mind to be managing positions. And since I did not record a video yesterday, I missed this adjustment that I made. So at the end of the day Wednesday, I really did not like in particular, it was the delta theta ratio, and where I was on the right side of this graph. I was not comfortable. I didn't like it. I felt like I had too much upside risk, and so I went in and rolled up the 4850 up to the 4900. This will be my last roll, because I was debating whether or not I even want to do this one more time, but I decided to do it one more time to stick in this position a little bit longer. And sure enough, today was a decent sell-off. And so you might look at this and say, oh, that obviously was a bad decision. That was a bad trade. And even more substantially on Russell, I did the exact same thing. So we were up in here somewhere. Let's go look at a chart. So on the Russell, yesterday was, so Wednesday, yeah, we were up here at 1383, couldn't closer to the all-time highs, and then just really pretty severe sell-off at the end of the yesterday afternoon, and then down this morning all the way down to 1360. And so I rolled my calls on Russell, roll them up somewhere in here in the afternoon, just before the end of the session. And you look at that and say, oh gosh, you rolled the 1390 up to 1410. What a terrible trade. Obviously, the very next day it went down. If I hadn't made that trade, I'd made more money today. But you can't think that way. You can't think that because of what happened the next day that validates or invalidates the prior day's decision. Because I made that decision not on any guess of where the market was going to go. It was exactly like the NASDAQ, the NDX. It was entirely based on the ratio of delta to theta and where I was on this graph, and I was not comfortable, and I didn't like where the ratio was, so I absolutely was going to do something. And really my choice was just to close some calls and just take them off, or to roll one more time from 1390 up to 1410. Obviously I decided to roll one more time, and now with the pullback, I mean, I'm actually doing well here. I'm actually sitting pretty well, made a little bit of money. I could have made more if I hadn't rolled that call up, but again, you can't think that way. And I'm happy to trade $20 or $50 for 150. So it's much more important to define your process, define your strategy, have your plan, and then judge your performance based on how well you execute your plan and how well you execute your process. And develop goals that are not money oriented. So instead of saying I want to make $5,000 a month or $100 a day or any of those sorts of monetary goals, because again, you cannot control that. You can control things such as, here I'm going to clearly define how I enter a position, and I'm going to monitor every trade I take. Did I stick to that process? Did I stick to that protocol? If not, why not? There is you can find some fruit. There you can find something to mine in your trading performance, where you can find some progress. There's progress to be made there. Similarly on exits. I'm going to have something when I put my position on. I have at least one exit strategy in mind, hopefully several, and then you can look and did I execute my exit strategy? Again, if not, why not? And really dig into why not. Why are you not following your process? Does your process need to change? Does your strategy need to adapt? Or is there something psychological, mental, emotional going on internally that is preventing you from following that? So that is really the key for me today. And it actually, I can say this now because it's taken me, it took me a while to change that mindset, to change that frame of thinking, and to not judge positions based on the profit and loss. And I really wanted to bring it up because, pretty much every day I go through and I point out where the profit and loss is, how much was gained or lost that day. And it's not that important. I'm doing it primarily because I don't know who the audience is, and I'm assuming that you are unfamiliar with this style of trading, or I'm gearing some of those comments towards people who are unfamiliar with this type of trading, this style, just so they get a feel for how these positions make money, how these positions lose money, what sort of market conditions affect these strategies, and how do they work day in and day out. So that's one of the main reasons I call attention to the profit and loss. And that's another reason why I will say things such as, looking at this position, that this is not my accurate P&L, and I really don't even know what the accurate P&L is. I have another spreadsheet where I can keep track of that, but like I said earlier, it's become so burdensome that I don't find I get any value out of it, and I don't care what I really don't care. I don't care what the P&L on this position is, because all I can do right now is manage where it is today. So at every moment that I'm in front of the computer and looking at this, I have a decision to make. Do I want to stay in this position the way it is right now and do nothing? Or do I want to take some sort of action? And what action would that be? And I can always take that action. And it should be regardless of the current P&L. That should not factor into what that decision is. The decision should be based on my risk tolerance, how comfortable I am in the current market regime, how comfortable I am in the current price action. And if all those things line up, then yeah, I'll stay in the position for at least one more day. And like I said a couple of days ago, or yesterday afternoon, I was not comfortable where this position was. I was too far on the right side of this graph. I didn't like the ratio of my Greeks, so I made action. I took a decision, took an action, made the decision. It turned out it would have been better if I hadn't made that decision, but again, you can't think that way because I had no idea. I had no way of knowing what the day was going to bring. We could just easily have rallied 20 points on Russell, and it could have blown through the all-time highs and had a big, huge short squeeze. And then I would have said, "Oh man, I wish I had just closed the calls entirely." So you can always hindsight yourself, and it's counterproductive. You can't. It's a terrible way to think, and I think it will inhibit your growth as a trader. But I'll just show you that despite the roll up, Russell move right back down in the center of this graph. Again, I'm comfortable where we are right here. I'm watching this strangle, which is now instead of 1390, 1330. I'll take off this 1400 because it's closer to the money. And even though the 1400 started as a vertical with a 1420, I have no qualms of taking that off, and then I'll have a 10-point wide vertical and a 20-point wide vertical remaining. And I can just take those off along with these puts. And these puts are getting fairly low as well, so those things might come off. But yeah, if I take off this strangle, this is a pretty easy position to manage. There aren't very many decisions left, and there aren't too many ways to get hurt. So I like that very, very much. The NASDAQ, here is the butterfly, factoring in this vertical roll that I made Wednesday afternoon. And just as a reminder, at one point this was down 5,500, and as I've said many times, I don't expect this to get back to break even. And here's another good example. If you had somewhere in your psychology where you felt incentivized, or you felt drawn to try to stay in this thing until you got to break even. If break even is that's an arbitrary number, but if getting back to break even is some big driver for you, and you feel a pull or you're feeling pushed to make decisions to try to get your P&L back to break even, that is, again, I would suggest a recipe for disaster. So I don't care. I really don't care what this number turns out to be. All I can do is manage where it is today. And then in the morning, I'll have a decision to make. And if it continues to be sidewaysy and fairly low volatility because of the holiday season, fantastic. I can stay in this for a few more days, maybe squeak out a bit more money. But as long as I feel comfortable with the trade, I'll stay in. As soon as I don't feel comfortable, I will adjust it or I will exit, regardless of what this number says. So let's show everything there and get rid of January and look at February. So February we're getting to the point. February now is at 55 days. So I'm transitioning from the 70 to 90 days into this mid range where I really don't have to do anything necessarily, but I start to get a bit more concerned about some of these downside puts, because a big move now it will hurt a lot more than it would have when there's longer time to go, the 80 days or so. So not that I'm worried about this or starting to close them, but we get to a time where I'm being more diligent observing these. But again, we're pretty well at the top of this hump. We've got a decent amount of space to the downside and the upside. So as long as it sits in the middle of this and both sides of this trade, the options, the calls up here decay and the puts over here decay, we can sit in here and make some more money. This will be great. So that is NASDAQ. We looked at Russell. Let's go through SPX briefly. It's very similar to the Russell position. I have a strangle here. I would love to take off here very, very soon. I've got the order in. I had it at 15. I bumped it up to 16. So I'm just keeping an eye on that. And I would love to close that tomorrow. In fact, I might just close it at some point tomorrow, regardless of the price. I'll work my order up a little bit. It'd be great to get it at 15. I'd take it at 16. It cost me $100, but $100 to take off the risk and free up $20,000 in margin, and that's a no-brainer. Even 150, that's a good deal. So I would absolutely look to do that tomorrow. I'll take that off tomorrow, one way or another. And then also these this call spread, there's put spread down here, the 2100, 2075 is I have ordered in to close that at 45 cents. It is very, very close, and it should close out in the morning. And so if those came off, and then I take this strangle off, that's all that's left. And I've taken a lot of the meat out of this, so there's not as much tread left, but the margin has drastically been reduced, and thereby, the big directional risk has all been reduced. And so that makes me sleep much better at night, because we're getting down to 27 days where, yes, you get accelerated time decay if you have at the money options, but you also have increased gamer risk, which is gamer risk just means you can think of it that the slopes get a lot steeper. And when the slopes get steeper, then it's smaller and smaller moves cause larger and larger losses. And from my experience and my temperament and my personality and what I like, I do not like to play that game. So I stay away from the shorter time frames. So that, even though this has a February check, that was actually January. So let's look at February. February is just a back ratio that I've been trading in March as well. This is one of the first times I experimented with this structure. Obviously, it lost some money today, which is to be expected with a bit of downside pressure and a slight increase in the volatility. But still, a long ways to go before anything needs to be done. It's still up money. It's not to the halfway point where I would take some profits, and it's not to my 75% of this credit where I would love to close this. So there's still just nothing to do. Just really don't even need to look at this or pay attention to it unless we start seeing more severe downward pressure. Um, or to go in and I might even have the orders. So the 2019-75, do I have that order working? I do. So I have this good to cancel order right here. February 2019-75 for 45 cents. And it's already a bit bigger at 70. So that's not going to fill anytime soon probably. But I'll just leave it sitting there. And then I don't really have to pay attention to it. And you never know, because sometimes the counterparty, market maker or someone at the exchange, just for whatever reason might want to buy this put spread, and they might fit their need for inventory. And even though the fair price might be at 55 cents or something, they might be willing to pay up, and they might just fill me to take my spread out. Or so I'm buying it, they'd be selling it, but they might, so that's happened on occasion where the mark price is 55 cents or even 60 cents, and my order will get taken just because somebody wants it. And that's great. So that's one of the advantages of leaving these good to cancels out there, because you just never know when they're going to fill, especially if you're trading the futures like this gold, because you can get some wonky moves overnight in the futures. And sometimes these gold or oil or bonds, so you get some nice fills in there in the middle of the night. Speaking of gold, let's look at that briefly. So I talked about that the other day. So this is everything in this position. Obviously, this is not the P&L for the day is not correct. The P&L for the open is, and I don't remember where it was yesterday, but I think it made a little bit of money today, because we once again stayed in the middle of this range. Both sides of this structure, the options decayed out because there wasn't a lot of movement, and I am in peel off mode. Oh, one last thought. I kept talking about how I was not in the mode to initiate any new positions, and I was just looking to close things. I didn't have a real good explanation, but I'm going to applaud my subconscious, because, as I said, I've not been sleeping well with the baby in the house and other factors. But I just completely blanked on the fact that in 2 weeks I'm going to be out of town on vacation for a week, and I really don't want to have a lot of positions to manage when I'll have the laptop and I'll have my phone, but I'll be distracted, and I know I won't be able to pay attention as closely as I need to. So that, thankfully, just either luckily or, as I said, I'll applaud the subconscious for taking care of me and making sure that I was not initiating a whole bunch of new positions, because I don't want to be managing a bunch of new positions in a few weeks' time. I'd be very, very happy to close out of all this January stuff, and then February in 2 weeks would be in the 40 days remaining range, and then I feel a lot safer managing from 40 to 30 days than trying to watch these things from 14 days down to 7 days. I've talked about many times. I absolutely do not want to play that game, and I certainly don't want to play that game when I'm not in front of my computer, when I'm across the country trying to enjoy vacation with my family. I do not want to be sweating $5 price moves on these really large stocks. So that is it for today. I'm looking forward to a year-end review. I've been thinking about, been reviewing the year. It's quite a story. It's a long story. So I'll record a video. That'll probably be a long video. But I'm very, very pleased. Although I don't show you my account value and the year-to-date P&L, I'm very, very pleased with this year-to-date P&L. Not because it's a great number, not because it'd be something to brag about. In fact, it doesn't even pay our bills. But considering where we were, or where I was with this account in the spring and early summer, where it is today is it feels very rewarding, and it takes some pressure off. And I'm proud of myself for hanging in this year and not quitting. And that's one last note to leave you on, is that it's a cliche, but perseverance really is. I think that is the fundamental factor. I think that's the fundamental attribute of what is going to separate a successful trader or investor from someone who's not successful. Because there are many, many setbacks, there are many, many failures, there are many, many times to doubt yourself, to doubt the validity of what you're doing, and all sorts of opportunities to quit and give up. And it's those people that are persistent and are willing to get up over and over and over and continue to try and to modify and try again and try again. Those are the people that will ultimately make it. If you are persistent and you're willing to change and you're willing to take responsibility, that is the number one thing that you need to succeed in this endeavor. Because without it, you'll be there'll be so many opportunities that at one point or another you'll just quit. And the sad part about quitting is you never know how close you were. I read an excellent article from a gentleman today, and he was really really close, and he had to make some fairly um, drastic really changes to his life in order to increase his account balance because he was just trading. He was undercapitalized. He just didn't have enough money, and so he made some big choices, some hard choices, and some big life changes in order to capitalize his account and save up the money. And he had the tools, he had the strategies. He just kept losing his accounts because he didn't have enough money to tolerate the drawdowns. And that's the sort of thinking and mindset and then action that is required to fail and fail and fail, and then look internally and say, what am I doing wrong? And then to take action to change it. And you know, unfortunately, very few people are able or willing to undertake that process. But I hope you're one of them. If you've been watching this and following along so far, good for you. If I can do anything to help you on your journey, let me know. Send me an email, comment on the video. I would be happy to help in any way that I can. I've been given a great opportunity, and I found some mentors, and it was worth all the money that I spent for them. I feel like I robbed them because I've gotten a massive return on that investment. And as a way to pay it forward, so to speak, or to share with you what I was showed that absolutely revolutionized my life, I would be honored and happy to help someone take those sorts of steps to get you on the path that I've been able to walk. Because it's a you know, like I said, there are struggles and setbacks, and there are times of doubt, but the upside is huge. It's a beautiful life. It's a beautiful life to work for yourself, to be able to go on vacation with your family when no one else is there because you can go anytime you want, to be able to go to lunch in the middle of the afternoon and play with your son and your children in the middle of the morning, and homeschool if you want to. You can do whatever you want. You can do this very passively part-time and create a nonprofit organization, run a charity, whatever your passion is. So it's a beautiful lifestyle. It's a beautiful skill to have. I would be happy, as I said, and honored to work with you and inspire you and put you down the path, to point you in the right direction, because there are a lot of great resources out there. And I've gone through and found them, and I'd be happy to point you to the good stuff and save you some time and trouble of trying to figure all this out on your own. Because it can be done, but it's a laborious process to sift through all the information that's on the internet and all the people who try to educate and figure out what's the good and what's the bad. So as I said, please comment, please send me a message. I'm happy to help, and continue watching, because I will continue to develop this content and try to tailor it to whatever someone would like to see. So enjoy your evening. Tomorrow is the last trading day before the Christmas holiday. It should be very, very muted. Usually there's very light volume, very little activity, and so I may record a video. I plan to. If I don't, then have a very Merry Christmas, and thank you for watching.